up? Friday. Hope everybody's having a great day. Welcome to this edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are about to do what we do, looking at our major markets and looking for breakouts and reversals as they are setting up. A couple of things to consider after yesterday's market movement. You know, we did the DMC yesterday, and we ended the day by going through our FANG stocks, right? Facebook, Apple, Amazon, Microsoft, Netflix, and Google. And when we went through those FANG stocks, we were pretty determined to say, hey, listen, all of these are showing weakness, and some of our market leaders are not showing strength. We're not anywhere near all-time highs in most of these positions, whereas the S&P and the Dow were still pushing towards those all-time highs. Well, yesterday kind of bared truth to it, a little bit of that movement as we saw that happen later in the day. So hopefully you were able to take advantage of some of that, get out of some of those long positions, roll out of some of those long positions, and take advantage of some of the shorts. But let's go ahead and dive in and take a look at the S&P 500 today. We talked about a breakdown trade yesterday below 46.95. Now, if you missed the breakdown trade at 46.95 because you got a little bit of cold feet, the basing maybe wasn't quite as close, that's okay. You did get a retest of that line to give you a secondary entrance. And then from there, we saw a pretty strong sell-off to the 15-minute level of demand. And that 15-minute level of demand was this little wick over wick here. I jokingly refer to those as noisy crickets. And we got a little bounce off of that later in the day, but without really strong movement, right? We hit it once, we moved away. We hit it a second time, we moved away. We even hit it a third time and moved away. So the noisy cricket level did hold some validity, hold some strength, rallied back up to this opposing area of supply, and now we're selling off of this opposing supply zone. So what am I looking at for today? Well, earlier in the week, I'd said that based off of Monday's run, you could play a little bit of a swing trade, but we talked about yesterday about if you got into the swing trade, moving your stop up to this 46.95. The thing that's most concerning about yesterday's move, and I've talked about this all week, is if I take a look at our average volume over the past few days, yesterday was above average volume on a big red candlestick day, right? In our S&P. If I pull up the SPY, which is our ETF of the S&P, you'll notice that our two up days were below average volume, and then our down day is above average volume. And so when you look at something like that, that does need to make you think about what are some of the conditions that are at play. And so, you know, just the day before we were at about 68 million shares. The next day we were at 90 million shares, right? So that's a big difference in terms of volume and getting above average volume on a pretty strong sell-off. So now I'm a little bit more interested to say, okay, well, this low was unable to give us to a new all-time high as of yet, and we may, you know, maybe we reverse. But when I see this, I'm getting higher lows, but boy, are those higher lows a little suspect, right? Those higher lows that we're seeing are a bit suspect, and we are seeing a little bit of weakness, a little bit of momentum slowing in the markets in general. So what I'm going to do is look today for short positions, right? I'm going to look today for short positions following that setup. Now, the first place that I'm going to look is going to be a breakdown below the Globex low. Now, why would I look for a breakdown below the Globex low? Well, because that's our 15-minute area of demand, which we hit once, we hit twice. And then we've got these two lower wicks below us that a lot of times people may want to use as demand areas. I don't really think that's going to be quality areas of demand. I think for the next area of demand that's worth a crap, you got to come all the way down to here. And at that point, this demand that we see down here would be a confirmation area of demand at that point, as we're retesting Monday's lows. Okay, so let me remove this one. Now, on a 15-minute chart, we actually do have a pretty decent area of supply right here, which was our a little bit of the move down yesterday and a bit of a retest zone. Could be a bit of a trap too, with people getting long above those three Globex highs, those highs that were formed in the overnight trading. So there is a little bit of a trade if you want to get long above that high, but then I think this would be where your next reversal is. So that's the area that I'm looking at today for the S&P. Nasdaq is weaker than the S&P in general. And so since the Nasdaq is weaker than the S&P in general, it actually blew through the next area of demand. And we talked about this breakdown, and it went right through that next area of demand. Um, so I think you would look for here as well for a potential breakdown trade. I think that's still very viable. We're only down less than 0.2% this morning, and so there's lots more room for price to fall from where we are. I think that we don't have an extended movement in the Nasdaq at all this morning, and I would definitely look on the short side this morning as better opportunities. The Russell 2000 continues to do a whole heck of a lot of nothing. If I look at this on the daily chart, you'll see that it's really just. I mean, this has been a very, very tough market to trade all year. For those of you that trade the Russell, it's been a very tough market to trade. I say all year, for the past year. Let's put it that way, as it's been very, very choppy. And we're really not getting a whole lot today. And then the Dow Jones is a little bit more buoyed by some of the financials and tech, the financials, the industrials, some of those consumer staples than say the Nasdaq, and that's what's keeping the Dow trading a bit higher than those other markets. Now, we did have a retest back into this 1 hour area yesterday of supply and got a pretty good sell off. And so I, at this point, don't think it makes sense to really trade the Dow or the Russell. I think your better trading is going to happen on the S&P and the Nasdaq because those are the ones that have the most exposure to tech. Now, I'm going to slide over and look at something a bit differently today. We're going to look at our sectors. And looking at our sectors over the past month, the comparison of those sectors, sector rotation does not work as well as it used to. There's just no getting around it. It used to be a much more effective way to look for the next tradable opportunity. But over the last 20 days, the S&P is down 1.31%, but technology is down 4.7%. Financials are up 4.3%, and energy is up 12.04%. So what we're seeing is more of a flight to quality, right? More of people moving towards dividend. Less growth stocks are getting the nod as far as what people really want to go towards. Consumer discretionaries, consumer staples, things like that all performed a bit better over yesterday. And so, are we seeing a more defensive play that people are getting into? And if that's the case, that there's more of a defensive play, you need to start looking at your own personal portfolios and saying, okay, how am I going to protect against a 20 or a 10 or 20% decline, right? What do I do to reposition myself? And if I look at this on a much bigger scale, like a daily or a weekly chart, this 44.99 that I put that line in there a few months ago, actually last month, because when we fell down in December, that was the line that I was concerned with. That was the area that I needed to pay attention to. Because on a weekly, that was our swing high with the next swing low. But I mean, our momentum is definitely showing some chinks in the armor, a little bit of slowdown. By the way, that's not a bad thing, right? A few months ago, at the end of the summer, we saw a pullback of about 6%. Well, that pullback of 6% then led to a 12% rally up, right? And so I'm not saying that we're going to get a huge sell-off. I am not here telling you we're going to get a 30% market correction. But would it be unrealistic to see a market go, say, to here and drop by 11%, or even, back down to this area of support at 11%, or even back down to here, which is 17%. Now that's a heck of a deeper pullback, but I mean those are some good areas of demand and some good potential buying areas back in here when I look at the S&P's longer term perspectives. So those are the ones that just keep in mind. Just keep those areas in mind, and as you're looking at your 401ks, your IRAs, certainly consult with your financial advisor to give you your individual advice on what you would do. But be aware of market weakness so that you don't get caught. What you don't want to do is sell out of your positions after the market's dropped 30, 40, 50%, right? Because that's typically when it rallies back up, in my history anyway, from what I've seen. Okay, so looking at crude oil continues to march higher. We talked about this area here for a breakout, and then we talked about this area down here for a reversal. So hopefully you were able to catch the reversal yesterday as we did come back into this level. About 6 candles later, it had gone not a whole lot of spots, so you may have moved your stop to break even. But then in the overnight, we just really ratcheted back up, and has continued to rally higher. So at this point, if you wanted to be long, I think you've got a good case to be long. If you didn't get in on the breakout trade, which I'm okay with you not getting in on the breakout trade because we didn't quite get quality basing, there is a retest area right here, right around the London Open, which is a good time of day for a good potential long. Looking at gold, we see that gold is still between the areas that we looked at, which were our higher probability zones, not giving us a truly clean or clear entry. Let's take a look real quick at the crypto futures markets, our Bitcoin futures as well as Ether. So in our Bitcoin futures, we are still in between our major breakout areas that we had talked about, 45,578 and 40,318. I think that you're probably setting up actually right now for a pretty good sell-off from this area of supply. So I'd love to see a retest back to here. Don't know that we will, but if you see a retest back to 42.5, that's a good place to get short. Ethereum, we did come into this area of demand that we spoke about yesterday, but then it just it didn't get below the pivot until just the last candlestick. But 1, 2, 3, 4, 5, 6 candles later, it had gone essentially nowhere, not giving us a good entry, and that would be a failed rally attempt at that point, right? So after we have a failed rally attempt, we then look for places where we can get short, and it would be right up here in Ether at about 32.54. So those are the two crypto areas that I would look at for today. Bitcoin and Ether both giving you short setups for intraday opportunities. Bonds and currencies, looking here at the euro. The euro showing me a little bit of a topping pattern after its very strong move higher. Getting a little bit of a topping pattern in through here. You could get a breakout above those highs. That would have happened from last night's session. So keep that area very much in play. I'm going to remove this one here up above us until we get a bit closer to it. But those are the levels I think that are still very playable in the euro. If I look over at our other currencies, New Zealand dollar did break through this area of supply. Remember, we got a good touch and go off of this level. Second time through was a confirmation. It cut right through it and not giving us an entry. Wondering if old supply is going to act as new demand and we get a bit of a bounce off of this area here. Not willing to take a long on it, frankly, at this point, because it doesn't give me a truly strong setup. Or if we base in here, does that become then a potential breakdown point with clean air running us down to this little wick over wick demand? I think that actually is a strong possibility as well in the New Zealand dollar. Nothing else here that's really jumping off the page at me. Looking at soybeans, we talked about soy earlier in the week. This thing we got a bit of basing. We dropped down, giving you a good 2-to-1 on this trade before then rallying a bit higher right away. I mean, you had to be lightning fast on that particular trade. And then this one, we came really close to the entry, bounced in front of it, and then never got in. So this level, in my mind, has to be at best a confirmation entry. Realistically, it's probably going to not be any good because we're going to base in front of that zone. And matter of fact, I'm wondering if we roll over from here and then this becomes a breakout trade and a setup. So remember what we talked about yesterday when we talked about some of the areas where you need to just pay attention to market weakness. But if you have any questions, as always, send us an email, support@tradersarmy.com. Until, remember, Monday, markets are closed, so we will be back Tuesday morning. I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.